The governments are lying everywhere. They're all a bunch of liars, and they're advancing their own interest at the expense of the common man.
Please join us for our next live stream, Sunday, March 8th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, March 8th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates and give us a thumbs up. If you like what we do, we really do appreciate your support and thank you for it. Our return guest today is Dr. Marc Faber, who is the editor and publisher of the Gloom, Boom, and Doom report, which highlights unusual investment opportunities. He's well known for his contrarian investment approach, and we are delighted to have him here again as our guest. Good day, Dr. Faber, and welcome back to SBTV. How are you doing?
I'm fine, thank you very much. And I'm very happy to be again on your program.
We're happy to have you once again.
Thank you.
Thank you. You know, I've heard you mention in recent interviews that many countries are in recessions right now, including Thailand, as we just quickly talked about. While the economic numbers may have yet to signal a technical recession, the economic slowdown can be seen in real life. As the publisher of Gloom, Boom, and Doom report, are we expecting only doom and gloom in 2020?
Well, there are many factors that will impact this relatively unpleasant picture. But I think that if you look at some indicators that have some bearing, like Chinese industrial production or air travel or railroad travel or even road travel in China, and if you look at, say, tourist arrivals in Hong Kong, they've collapsed from approximately daily arrivals of 250,000 to 3,000 at the present time. The airport is like a ghost town. I mean, if you ever want to show your children what a ghost town looks like, that still has some life, then take them to the Hong Kong airport. It's no longer crowded by the demonstrators, but it's empty. And so are the shopping malls and the restaurants and the hotels. The hotels in Hong Kong that traditionally have an occupancy rate of around 90%, they have now an occupancy rate in single digits. In other words, below 10%. So if you talk about a crisis or a crash, that tourist arrival chart will show you what a crash really looks like. And you know, in Thailand, the tourism is also down significantly, and I tell you exactly why. China accounts for 28% of tourist arrivals in Thailand. It accounts for 32% of tourist arrivals in Vietnam. So when the Chinese no longer travel, I can tell you that the hotels are dying. Dying. And I can see it every day. Actually, I wrote about this already a year ago, that if I look around, and I'm an economist, and I'm an academic economist, I went to school and to university and all this BS, but as an economist, you should also look at what is happening around you every day. So if I was driving already a year ago in Thailand, I noticed there was less traffic than usually. And of course, the government is lying. The governments are lying everywhere. That you can assume for sure. There's no exception. They're all a bunch of liars, and they're advancing their own interest at the expense of the common man. So in Thailand, they still showed economic growth, but very clearly there was a very significant slowdown. And I travel also to all the other Asian countries. I also noticed a significant slowdown elsewhere. And I happen to have built some hotels in Vietnam with my partners. Actually, they built it and I was a partner. But in one hotel, the Four Seasons in Vietnam, in Hoi An, I still have some houses, some villas. And when I'm not there, we let them out. They are let out by the management company Four Seasons. I can see what the occupancy rate is. It's began to go down a year ago. And now it's quite bad, although I have to tell you that if you talk about coronavirus, you're probably better off in a villa on the beach in Vietnam than sitting in a large city.
Yeah, I totally agree with that. You mentioned a few places, China, Hong Kong, Thailand, Vietnam. These predominantly are all in Asia, Southeast Asia. What do
Yeah,
you think would happen if this moved over into, let's say, Europe or even
the
U.S.?
US. Let's,
Yeah,
let's say the US, to the homeless in San Francisco and Los Angeles. That would be total disaster. And I mean, I don't want to scare anyone, but I can show you. I have here a book, Plagues and People. This is a book about how plagues have influenced economics and also warfare and societies, how certain societies were immune to germs and others was like when the Spaniards went to Mexico, uh, they won the war against the Aztecs mostly because the Aztecs were killed by smallpox. They didn't have the immunity, whereas the Europeans had the immunity. And again, I don't want to scare your listeners, but I just like to say, last year, 2019, we had the African swine flu, okay? It's a flu that didn't transmit to humans, but 25% of the swine population worldwide was destroyed.
wow.
25%. If 25% of humans were destroyed, we would be talking about 2 billion people. If we talk about the Black Plague, Black Death in the Middle Ages, in the 14th century, it broke out in Europe in Kaffa, which is on the Crimean island, and then traveled by boat, by ships, throughout the Mediterranean and then northwards in Europe. If we talk about that, it reduced the population of Europe at the time by approximately 30%. In some cities, much more. In some cities, it was 80%. But in other areas, it didn't touch it much.
Yeah. Dr. Faber, no worries. Being the author of the Gloom, Boom, and Doom report, you wouldn't put any fear in us. But getting back to this, one more question with this coronavirus. Is this something that could definitely burst all of these everything bubbles that we've been talking about for years?
Well, the thing is, investors or the eternal optimists have pointed out that SARS, which happened in the spring, it began in around February 2003, but it didn't last very long. By June 2003, it was over, and the market went up. But you have to understand, the markets had peaked out in March 2000. They had been in a bear market that essentially brought stocks down approximately 50% from the high in year 2000. Some stocks went down more, like the high-tech stocks and so forth, but say the Dow and the S&P went down by about 50%. So SARS broke out when stocks had already had a bear market. This time around, as you know, we've been in a bull market since March 2009, and we've been in a powerful rally since essentially October of last year. And as this coronavirus broke out, the market went up even more because investors are conditioned to the view that bad economic news is very good for stocks because the Fed will print money. You understand?
Yeah.
So if you really think it through what investors are thinking, it means that if you are a large shareholder, say we too are large shareholders, we should launch an advertising campaign and tell people stop working. Then the economy collapses, and then by logic, the Fed will print more money and our stocks will go up. You know, it just doesn't add up. But this is the logic that investors today apply to the market. And it worked so far. You know, each time there was a problem, the Fed printed more money. There was last year the repo problem, so the Fed printed again more money. They don't call it QE, but it is an expansion of the balance sheet of the Federal Reserve. And I think this repo market expansion will, the bailout of the repo market will continue. I suppose by April, the balance sheet of the Fed will exceed the peak 2 years ago.
Yeah, that's what I was going to ask.
Anyway, you understand? So the coronavirus is hitting not emerging markets. Emerging markets are already down a lot, but it's hitting some advanced markets like the European markets and especially the US after a huge rise in equity prices. Whereas the SARS virus hit the market when it was depressed.
Okay. Yeah, it's a big difference there. But I was also going to ask you, you touched on it with the repo markets and things like that. How long can this keep going on? I mean, it's going to make it at least until, let's say, or will it make it at least until U.S. elections and after that?
Well, after that, who knows, you know? After the U.S. election and another 100 years, we're all dead, so we don't know. But my view is, and it has been, when the Fed started QE1 in December 2008, I said, this is a permanent program. It's not going to go away. Once you embark on printing money, you can, and this has been described very clearly by Hayek and von Mises, once you start printing money and you finance the economy with credit, the only way to keep it going is to continuously increase the quantity of money you essentially print. The moment you just print money constantly, you already have a crisis. So it has to be at an accelerating rate.
Okay, yeah, so that's obviously where we're at now. Is there any way to turn this around, or how do you see this the end game? How does the Fed and all this printing eventually stop, or what is it going to take for it to end?
I think this is a question that people might, like myself, but not only myself, are preoccupied the most. How will it all end? Now, some people will say, well, we don't care how it will end. We only care how much money we'll make between now and the end. You understand? So frequently people, or the president of the US, he doesn't care. And I'm not talking about Trump, I'm talking about all the presidents. Because the president, whoever is president of the US says, okay, I'm in the US, the issue is to get re-elected in 4 years. And then after 8 years, What do I care what happens thereafter?
Yeah.
I'm in the US, I'm the president, I see to it that the economy is okay. I borrow as much money or more money than anybody else. I create huge deficits. I ask the Fed to print money in order to finance these deficits, and the rest, I don't care. I don't give a S. And so nobody addresses these problems, and they all kick the can down further. The same, the IMF, whoever is at the IMF or whoever is at the ECB, they all don't care about the end game. They only care about themselves staying in their position and kind of, whenever there is a crack somewhere, repainting the building. But they don't have the money nor the will to really repair the whole system. And if you ask me what will eventually happen at the very end, I think there will be a collapse of the monetary system, and we may move into planned economies, possible. That is socialism, communism, or a totalitarian state. But before this all happens, I would imagine that some real assets like gold and silver, platinum, and so forth will be assets that investors will invest in.
Yeah. Okay. You know, Dr. Faber.
My guess.
Oh,
you
sure.
know.
Okay. Dr. Faber, you know, when
Yes.
we keep hearing the debt rising, just continuing to go. What does it mean for the average, just the average guy? I mean, he keeps hearing how this debt is growing, but what does it mean for him? What should he be thinking and understanding when he hears that?
Well, first of all, who is the average guy? But let's say someone is a teacher, or someone is a worker in a factory or in another occupation, and he has a pension plan, and he makes contribution to the pension plan every month. I think the pensions will have to, these pension funds will have to be bailed out by the government, or they will have to cut the benefits, or the pensioner will have to increase his contribution very substantially. But I've seen in Europe some pensions have already been cut because you, as you can imagine, say a typical pension fund has maybe, 40-50% of its money in bonds. And if they have a negative yield, how much do you think they can pay out? So I think the typical guy, like always in history, the ordinary person, like always in history, will be screwed by the elite. Now, you can hope that you get into the elite, and to do that, you had to essentially be in assets in the last 30 years. Real estate, stocks, bonds, and so forth. And the cash holders, although the government will tell you, and as I said, the governments always lie, also the governments will show you that there is no inflation or very low inflation. The fact simply is that you and your family, if you have children especially, have rising costs of living every year. Yeah. You pay more tax, you pay higher school fees, you pay higher insurance premiums, you pay higher medical costs, and so forth and so on. For the typical consumer, the only thing that go down in price are things that he no longer wants, like video cassettes and cameras. Everybody has his camera built in the phone nowadays. So these things are going down in price. But these are also things that most consumers no longer want. and the things that consumer want and your children want, like Apple phones, they go actually up in price. Or tickets to Disney World or Disneyland, all this goes up in price.
You know, the money printing of the current scale was once deemed absurd, but it has lasted for decades. Will negative interest rates do the same, or will it die a quick death?
Well, this negative interest rate is a subject that is extremely complex, because let me explain you the following. Okay, you can buy today, I will give you the figures precisely, a Swiss franc bond, and you pay 113.6 for a zero coupon bond, 10 years maturity. In other words, in 10 years, this bond doesn't pay any interest. It is a zero coupon bond. In other words, today you paid 113.6, and in 10 years you get 100 back, okay? So you lose money. Then you say, well, it's absurd that an investor would do that. But let me give you another example. In 1970, you could buy a 10 years bond in the US at the yield of, say, 6%, and then inflation accelerated and these bonds went down and interest rates up to over 15%. So actually, in real terms, you had also negative interest rates at the time, except the interest rates was positive, but negative was because of inflation. So it's similar, it's an unnatural situation, but it happens occasionally, and I don't know how it will end. Of course, these negative interest rates in real terms never last for long. But the markets today are so complex, and there's so many expectations built into the market. So if you ask me who on earth is so dumb as to buy a 10-year Swiss franc bond where he is guaranteed to lose 13 over a 10 years period, I tell you, one, government institutions like pension funds and so forth, and also insurance companies and anyone who is regulated is forced by the government to buy these kind of bonds. You understand? Yeah. So one of the threats and how it will end is, of course, that the government says, okay, all of you, you have in your IRA accounts to buy government bonds, okay? And then who will oppose that? Yeah. It's the government that tells you to do it, and so you will have to do it. They can check. So that's one way to essentially screw ordinary people. Second thing is, if an investor, I'm not saying it's me, but let's say I assume that the markets today will collapse by 80% or 50%. And then I say to myself, the Swiss government is likely to be able to pay its debts because the financial condition of Switzerland is reasonably good. So I said to myself, yeah, on Swiss franc bonds, I'm going to lose 13% over 10 years. But to lose 13% is a very, very small price to pay. If you and my neighbors all lose 80%, then I'm actually the king. You understand? The third reason why someone could buy these bonds is to say, I believe that the Swiss franc will go up by 50% against the US dollar. I'm not saying this is my belief. I'm saying someone who has this belief could essentially argue, let's buy European sovereigns at any price because we expect expect the US dollar to tumble. I happen to expect that the US dollar will tumble, but I also expect that the other currencies will tumble. Now you come and ask me, Mike, well, if every currency tumbles, what will go up? Big question. I happen to think it will be gold, silver, platinum, but maybe it will be something else.
Do you see these negative rates coming to the U.S. soon once the Fed runs out of room to cut rates?
Well, I'm not sure it will happen in the US because, one of the reasons the dollar is strong is precisely because European bonds have such a low yield. I will go back and tell you what the details are. The 10 years US bond in US dollars yields 1.52%, okay? We can safely assume for now that the US dollar, that the US can pay its interest. On the other hand, the 10 years Greek bond, Greece, a country that has repeatedly defaulted, is yielding 0.94%. So it's yielding almost half as much as the US. Now let's go to Spain. Spanish bonds yield 0.22%, 10 years. And we have Italy yielding 0.9%. So you can see, if you are an institution in Europe or you're a bond fund manager, automatically you say over 10 years, I'd rather be in US treasuries at 1.52% than in Spain at 0.22% or in Greece at 0.94%. Now, in the Netherlands, in Sweden, in Germany, in Switzerland, in France, we all have negative interest rates. And but in the US, I have some reservations that this will happen. But it's possible. There are academics, of course, academics, they always have the most abstruse ideas. I mean, the world, if it was run by academics, the world would be bankrupt a long time ago.
Okay. Hey, Dr. Faber, you also mentioned if let's say we foresee some type of a currency collapse, you mentioned things like precious metals. What is it about precious metals that make it a place to run to whenever things start to fall apart? Why is it that safe harbor?
Well, it's a good question. I would think that the reason why throughout the ages people have held precious metals is that the supply is relatively limited. It increases every year, but at a moderate rate. You can't print gold. You can't print silver. You can't print platinum. So because the supply is limited, I think it has some collector's value. But there is a threat, there's a threat among the socialists for every one of us, and that is expropriation. They can take your stocks away, they can take your bonds away, they can take your gold away. All is possible. The most obvious to take away is your house. So when people say, oh, I'm so glad to have my house, maybe it will be taken away. This happened before, times and again.
So much of these financial assets out there today are debt-based. Do you foresee a major global destruction of paper or digital wealth? I mean, I know we touched on this.
Yes, I think so. I think it's going to happen. Well, it was prevented now through the intervention of the Fed that intervened in the repo market. But it's going to happen again.
Yeah. That repo market, what do you think is really going on? Because I think, what we're hearing from Jerome Powell doesn't really make too much sense.
Have you ever heard anything that makes sense from a government official?
Nothing except vote for me.
Yes, that is quite logical. But anyway, I think that, and I'm not an expert specifically on the repo market. They are experts and so forth, and probably they won't tell you the truth. But in my opinion, it's a market that is dominated by essentially banks that borrow overnight money because of liquidity requirements. And this market has become also now increasingly dominated by shadow banks, lending institutions that need liquidity overnight, and by apparently highly leveraged hedge funds, where the leverage is sometimes 10 to 1 to achieve some returns in this low interest environment. Apparently, they got into some liquidity issues, and so the repo market has been kind of had to be supported by the Federal Reserve. I think this is quite a serious matter, but it doesn't surprise me. As I said, for me, currently, the biggest economic issue in the world is the coronavirus. And as I said, I'm amazed at how complacent investors are about it. Because if you look at what happened on this Princess cruise ship that was under quarantine in Japan, you can see that actually the infection rate is very high. Only 2 of the passengers have died, but it's a nasty sickness to catch. And psychologically, it has I don't know why, because every year there are, like 200,000-300,000 people that die of the flu every year, or there's 70,000 people in the US alone that die of excessive doses of opioids. So the death toll so far of 2,100 coronavirus deaths is relatively low. But seemingly it has a huge impact on the behavior of people, and probably it shows that people react much more, partly because of social media. Social media can spread very rapidly all kinds of rumors, but maybe it will have a permanent impact on the way people live. Maybe people will work more from home and go less to crowded places. Yeah. Maybe they will travel less and do the conferencing like we do, or through Zoom or through Microsoft, that kind of software. Or maybe they don't go to the football games again, or basketball, and stay at home and watch it on a large-scale screen, TV screen, and so forth. So that may change a lot, the pattern of traveling. And I think crowded cities are most vulnerable. And so far, we haven't heard of any cases in India. I can tell you, every government is hiding the number of corona infections. If you're a small country and you depend on tourists and business, would you broadcast how many cases you have? India will be a cesspool of coronaviruses.
Yeah, one other thing.
Africa the same.
Yeah, well, one other thing with this coronavirus I saw recently, China is seizing their banknotes for some type of cleansing, and along with that, we also see reports, where central banks, they want to create a central bank digital currency. In both regards, you're looking at the world going cashless. Is going cashless a good thing? What's your opinion on that?
I think, yes, the world will be cashless. I think that our children, when they go shopping, they will not have a wallet and pay with $100 or $50 banknote. They'll have some kind of an application on their mobile phone or another device, just scan it, and then they will get the bill later. or it's a prepaid card as we have already today. I mean, a credit card is to a large extent already a cashless world. You pay everything with a credit card. Now, if you go to the grocery shop and you buy something for $2, probably you won't pay with your credit card, but actually some people do. I don't. I pay most of the time cash because I'm old-fashioned. And one reason I use cash is there less theft. Because with my credit cards, especially in Thailand, it happened a lot that someone then used my credit card in America for shopping.
I just want to touch on something really quick where Mike Maloney, he recently released a video which showed the total market cap for silver stocks to be only about $23 billion, while the value of all 80,000 tons of above ground silver in bullion form is roughly worth about $47 billion, compared to tech giant Apple, which has about $200 billion in cash. In theory, Apple could buy all the silver stocks and above ground silver stocks and have 65% of its cash left over. So my question is, what do you think of this crazy difference in the valuation of stocks and the price of a precious metal like silver?
Well, we have statistics going back almost 150 years about the Dow Jones compared to, say, the price of silver, or the Dow Jones compared to the price of gold. And yes, I mean, stocks are high now compared to gold and silver and platinum, but they're not as high as they were in year 2000. So essentially since 2000, bullion has outperformed stocks. Not if you include the dividends on stocks, but in most cases, the typical investor, had he bought gold in 99 at, say, less than $300, by now he'd be around $1,600. The typical investor would have done much better and slept much longer if he had put all his money in gold in year 99 and never touched a single share. Because we're talking here about the US market. Many other markets have performed much worse than the US market, and many currencies have performed much worse. So basically, it's been a good investment. But this raises, of course, the question, it's been a good investment for the last, say, 20 years. Will it be a good investment for another 20 years? As I told you, I think relatively to stocks, to financial assets, I think precious metals are still reasonable. They're also up, as I said, gold from 300 to 1,600. And silver, I think the low was around $2.50 in 1994. And it's now around $17. So it's gone up, but I still think compared to equities, then it's not up that much.
So if we agree that the gold price is reflecting in part the destruction of purchasing power in fiat currencies, how high could the gold price go?
That I don't know. If you print money,
Yeah.
both for stocks, that we have to admit, both for stocks and for precious metals, the sky is the limit. But usually in the final phase, stocks underperform precious metals.
Gold, silver, platinum, palladium, precious metals, which one are you more favorable towards?
I think the most undervalued is platinum. But, it has, like today, it hasn't performed well. Myself, I've been buying gold every month since essentially the mid-1980s. I just tell my bank, buy this quantity of gold every month, and I don't pay any attention to it. I don't even value my gold. I don't exactly know how much I have, but it would seem to me that I have quite a lot already.
Yes. I would think you have quite a bit, and I'll fly over to Thailand and help you count it anytime.
We have to undig it, dig a hole to get it out of the ground.
Dr. Faber, before we wrap up, can you let our listeners know more about the Gloom, Boom, and Doom report?
Well, I have two reports. The Gloom, Boom, and Doom report is a written publication that goes out to my readers by mail, and it's not a kind of an investment letter that tells you buy A, B, C, and sell X, Y, Z, but it discusses some issues that have to do with social trends, economic trends, political trends. And like now I'm writing about plagues and pandemics and the impact on essentially economics. And then I have a monthly website report, which is similar. Of course, I don't say in the Gloom, Boom, and Doom report buy and the other report sell. You understand? They're on the same line. But it's more market timing related and more for individuals, whereas the Gloom, Boom, and Doom report is more for strategists and for financial institutions and very wealthy people. So both reports are available from my website, which is gloomboomdoom.com. I repeat, gloomboomdoom.com, all in one word.
We got it. We're definitely going to send people that way. Dr. Marc Faber, well, again, we appreciate your time and we wish you all the best, and we hope for some boom in 2020, and we'll be keeping an eye on you.
All the best. And don't drink too much Corona beer.
That was Dr. Marc Faber, the editor and publisher of the Gloom, Boom, and Doom report. For more information about his work and his views on the economy, please visit his website, www.gloomboomdoom.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.